Ever wondered how businesses make profits and maintain a healthy financial status? The secret lies in effective management accounting. This is a vital aspect of any business, big or small, as it provides a clear picture of the organization's financial health. It's a tool that helps managers make informed decisions, strategize, and steer the business towards success. Now you might be thinking, what exactly is management accounting? Simply put, it's the process of identifying, measuring, analyzing, interpreting, and communicating financial information to managers for the pursuit of an organization's goals. We're diving into the world of management accounting as envisioned by Garrison in his insightful book. This book covers a wide spectrum from the basics of managerial accounting to advanced topics like cost-volume-profit relationships and budgeting. It's a practical guide full of theories and real-world examples that every aspiring manager should have in their toolkit. Intrigued? Let's delve into the world of management accounting. Imagine a ship sailing in the ocean. To navigate successfully, the captain needs to understand the environment. Similarly, businesses need to understand their environment to make effective decisions. Managerial accounting is like the captain's compass, guiding the business through the vast sea of the market. It's not just about numbers and calculations. It's a holistic approach that takes into account both external and internal factors. The external environment includes the market trends, competitors, regulations, and the economy. These elements influence the business's strategic decisions, pricing, and product development. On the other hand, the internal environment comprises elements like organizational structure, resources, and company culture. These factors primarily affect operational decisions, resource allocation, and performance measurement. The interplay of these factors shapes the business decisions. That's why managerial accounting isn't just about crunching numbers. It's about understanding the business environment, interpreting the data in this context, and making informed decisions. Understanding the business environment is the first step towards effective management accounting. Just like knowing the language of a country helps in communication, knowing the language of management accounting aids in better decision-making. Diving into Chapter 2, let's take a closer look at some key terms, concepts, and classifications that are the building blocks of management accounting. Picture these as the essential vocabulary you need to navigate the world of costs and expenses. First off, we have cost objects. This may sound like a fancy term, but it's quite simple. A cost object is anything for which a separate measurement of costs is desired. This could be a product, a service, a project, a department, you name it. Then we have direct and indirect costs. Direct costs can be traced to a cost object in an economically feasible way. Imagine you're making a cake. The flour, eggs, sugar, these are your direct costs. They are directly involved in the process of creating your product. On the other hand, indirect costs, also known as overhead costs, can't be traced directly to a specific cost object. Using our cake example, the electricity to power your oven or the depreciation of your baking equipment, these are indirect costs. They're a part of the process, but not tied to a specific cake. Now let's talk about cost classifications. Cost classifications are like different lenses through which we can view costs. These classifications include behavior, traceability, function, and relevance to decision-making. Each lens offers a different perspective and can be used for different purposes. For instance, when we classify by behavior, we look at how costs change with changes in the level of activity. Fixed costs, variable costs, and mixed costs fall under this umbrella. When we classify by function, we categorize costs into manufacturing and non-manufacturing costs. Manufacturing costs include direct materials, direct labor, and manufacturing overhead, while non-manufacturing costs include selling and administrative expenses. Mastering these terms and concepts will lay a strong foundation for your journey in management accounting. What happens when a business sells more products? Does the profit increase linearly? The answer lies in understanding cost-volume-profit relationships. Let's dive into the fascinating world of cost-volume-profit relationships. Imagine a seesaw. On one side we have costs, on the other side we have profits. When one goes up, the other tends to go down, right? Well, not exactly. In the business world, this relationship isn't always so straightforward. Here's why. The cost-volume-profit analysis, also known as CVP analysis, is a method that helps businesses understand how changes in volume affect costs and profit. It's a crucial tool in managerial accounting that allows businesses to make informed decisions about their operations. At its most basic, CVP analysis focuses on three variables: Costs, volume, and profit. Costs can be fixed, like rent or salaries, which don't change with the level of production. Or they can be variable, like raw materials, which increase as more units are produced. Then we have the sales volume, which is the number of units sold. And finally, profit, which is what's left after all costs are subtracted from the sales revenue. So how do these elements interact? Let's say a business decides to produce more units to increase sales. Variable costs will rise, but fixed costs will remain the same. This means that total costs will increase, but not as fast as the sales revenue. As a result, the profit will also increase, but not in a linear fashion. But remember, this relationship isn't static. Other factors can influence it, like changes in the selling price, production efficiency, or market demand. That's why businesses continuously monitor and adjust their CVP relationships to optimize their operations. Grasping the cost-volume-profit relationship is vital in predicting how changes in a business will affect profits. So, the next time you're wondering if selling more products will linearly increase profits, remember to consider the seesaw of costs, volume, and profit. Planning is crucial in every aspect of life, and business is no exception. Budgeting is the tool businesses use for financial planning. Imagine you're planning a road trip. You wouldn't just hop in the car and start driving, would you? No, you'd map out your route, calculate your fuel costs, and maybe even plan out where you'll stop for meals. Budgeting is essentially the same process, but for a business. It's a financial plan that anticipates incomes, expenses, and profitability over a specific period. Now, there are several types of budgets that businesses use, and each serves a different purpose. Let's delve into a few of them. First up is the operating budget. This is a detailed projection of all estimated income and expenses during a particular period. It's like your road trip's itinerary, outlining where you're planning to go and how much you think it'll cost. Next, we have the cash flow budget. This one's all about timing. It tracks when the company expects to receive cash and when it expects to pay bills. Think of it as your road trip schedule, detailing when you'll be stopping for gas or grabbing a bite to eat. Then there's the capital budget. This one's a bit different. It involves planning for long-term investments like buying new machinery or a new building. It's like planning for that big cross-country road trip that you know will take a lot more resources and time. Finally, we have the master budget. This is the granddaddy of all budgets, combining all the others into one comprehensive plan. It's like having your entire road trip, route, schedule, and all, mapped out in one place. Each of these budgets plays a vital role in a company's financial planning. They help businesses make informed decisions, control spending, and ultimately achieve their financial goals. Budgeting is like a roadmap, guiding businesses to their financial goals. So, whether you're planning a road trip or running a business, remember, a well-planned budget is your ticket to success. So, we've navigated through the world of management accounting today, but remember, this is just the tip of the iceberg. In the brief time we've shared, we've traveled through the diverse landscapes of management accounting. We began our journey in the bustling business environment, where we discovered the role managerial accounting plays in strategic decision-making and performance evaluation. We then ventured into the realm of cost terms, concepts, and classifications. Here, we learned how to distinguish between direct and indirect costs, fixed and variable costs, and how to apply these concepts in real-world scenarios. Our journey led us next to the relationship between cost, volume, and profit. We explored the balance of these three elements and how they're interconnected in a business setting. We saw how changes in one factor could significantly impact the others, and how understanding this relationship is key to successful business management. Our penultimate stop was in the world of budgeting. We learned how budgeting acts as a roadmap for businesses, guiding them towards their financial goals. We delved into the different types of budgets, their purposes, and how they work together to provide a comprehensive financial plan. But remember, each chapter we've covered today forms a single piece of the vast puzzle that is management accounting. As we've seen, it's a field that intertwines the disciplines of accounting, finance, and management. Every concept, every term, every relationship we've discussed is a tool to help managers make informed decisions. However, the beauty of this field lies in its practical application. So as you delve deeper into the subject, I encourage you to practice these concepts, apply them in different scenarios, and truly understand their impact in a business setting. The world of management accounting is a fascinating one, filled with insights and strategies waiting to be discovered. And our journey today is just the beginning. Continue exploring the fascinating world of management accounting. Don't forget to subscribe for more enlightening videos on various topics. Until next time, keep learning.